Let's talk about the next question. That's in the IT space. Kishore is asking whether or not to buy one, of course, in the IT space and for a period of 1 year. Amar, if you were to buy a stock today for 1 year, which IT company would you buy?
So I would look at buying TCS from a long-term perspective, but not at the current levels, because currently we are seeing some sort of consolidation. It has got very strong support coming around the 3900 level, 3900. So any pullback in the stock, if we see some correction in the stock, then that could be a good level for entry, because upside somewhere seems to be capped around the 4400 odd level. So buying on any correction can be looked at in TCS.
Okay, next question is next question is for actually BEL. Well, our viewer has bought 400 shares of BEL at 275, and he's asking about the medium-term target and whether this one will reach at 350 levels or not. And this one is from Rajiv. Actually, can you maybe give us a view on this one, Samir?
No, it's a technical question actually.
Okay.
So let's take it to Amar. Amar, on the charts, 3-month perspective, will it cross 350?
Yeah, so if you look at the stock continues to remain strong and positive on the long-term charts. Intermediate-term trend, yes, there definitely has been some sort of consolidation happening on the intermediate-term trend, and the short-term trend has turned positive. So that's one good thing. However, the stock needs to sustain above the 310, 312 mark. That's very important, because what's happened is that the long-term trend is positive, the short-term trend is positive, but the intermediate-term trend is quite negative. So what happens generally in such cases is that the stocks do rally because they are moving from an oversold territory after a sharp correction. Because if you look at BEL, the stock had corrected from almost 340 levels to 257. So that was a sizable correction of almost 70 points, 70, 80 points. So roughly in terms 25% or so. So we are seeing this pullback. So any meaningful rally is only above 310, 312 levels. Then the stock could witness some rally towards its earlier highs.
Okay, Samir, coming to you on the next. Sometimes my mouth does not catch up with my brain, and unfortunately that is the case. But Engineers India is the counter that we're talking about. 229 is a buy price. Govind Bhatia from Dubai is asking this question. He's looking to hold this in his retirement portfolio, which he's planning to hold for the next 5 years at the very least. Would this be a pick to hold, Samir? And what would you say on the fundamentals?
Okay, so first off, Alex, it's good that your mind works faster than the mouth. The mouth works faster than the mind, which is dangerous.
I'm glad as well.
Having said that, so EIL is a good company, but is it something that you should hold on for eternity? Something like a retirement thing, which is the question. I think there are better opportunities with companies that are more aggressive, which can deliver better growth prospects. See, eventually you're buying a stock. When you're investing in a stock, you want the company to be a growth company, which is profitable, generate good cash flows, paying out good dividends. Now, EIL fits two of the bills. One is it pays out good dividend. And two, it's a relatively debt-free company. It's actually debt-free, it's cash rich. And they're growing. But the growth, if you look at it across the space, is not as great as some of the other companies in the engineering space, right? You take L&T, for example, you take some of the other infra engineering companies which are also there, which grow at a much quicker clip, which will allow the stocks to probably give a better return over a period of time. So for me, would you hold on to it? Yes, you could hold on to it, but would it be my top pick in the space? No, probably not.